Alright, this is a daily outlook into Tuesday, July 7th. Shouldn't be too long of a video. I don't think there's too much to talk about, but we'll look at nonetheless the new range on the 3-day look back, and we'll see where price is inside of the range in the 4-hour on the 4-hour chart, right? So the 3-week look back range. Overall on the daily, you can see, the previous day's range here was a doji, right? So an internal bar. You can see also that this range has failed to displace above 50% of the PD at 50% of the previous monthly range, right, being here the suspension block. So this is pretty important information, okay, especially if coming inside of New York today, you see that the daily profile is potentially setting up as a classic sell day. This candle alone should give you enough narrative to be looking for discount targets. But there's a different couple ways you can view this, right? You can view this as the market expanding, reaccumulating, expanding, right? Or you can view the market as expansion to consolidation, right? And now you have to see how the market trades inside of the range of the new week opening gap. Obviously, the question as to what the market should do next, right? This or this. Well, that's going to be based on today's daily profile, obviously, right? You're going to need to identify the characteristic of certain whatever the daily profile will show up as, and from there you'll be able to answer the question, right, as to where price should go next. Again, we know about the discount target, we know about the premium target, so I think the daily chart is pretty much covered here. We're overall still trading at 50% of the range, right? And price comes from an expansion, right, to yesterday a doji bar. Okay, so will be important to see how it trades at the previous day's low. Will be important also to see how it trades at the new week opening gap here. Okay, we can look at the range of the 3-week look back. You can see the previous day's range here, the range of Monday, making a low of day, right? At this is a level that we talked about being an inefficiency located at 25% of the 3-week look back. But most importantly, right, created a high of day inside of the lower quadrant, almost reaching up to 50% of the bearish order block, right? And we said that this bearish order block is important here because it is an obvious shakeout in the range, right? Being obviously a lower time frame intermediate term low, right, as we identified on the 3-day look back chart, and I mean, basically you can see that the market rejected at these levels, right? Every time it trades to the lower quadrant of it, right, it's not even able to get to 50%, right? And you can see that so far the market has opened and it is trading lower. So, overall not very positive for higher, right, to see price deliver towards premium targets. Obviously this can be saved if, say, there's a shakeout under this low, right? Market trades, say, to 50% of the fair value gap and then trades higher. This can lead to a continuation of this overall range, or can lead to obviously a reversal higher towards the relative equal highs. But if this level is, right, well, this is an intermediate term low here as it closed the fair value gap. Right, if this level were to get displaced through strong closure through it, then I do believe that the low of the range of the 3-week look back will be the draw on liquidity. Right, and also important thing here, the market failed to create here a bullish order block at the quadrant. right? So to me, this is not positive price action to see price deliver towards premium. Obviously, everything could change, right? Could be come inside New York and price does this. But if price were to displace the intermediate term low, inverse the fair value gap located at 25% of the 3-week look back, then I do think that the narrative to trade towards discount target is pretty strong. I would say currently it's stronger than to target premium targets, just because of the way that the yesterday delivered here. Right, failing to create a bullish order block at the lower quadrant of the bearish order block. Not even able to trade to 50%, right? Every time it trades to the lower quadrant, it fails. So not very bullish price action at the moment here. I do think that price will want to target, will want to have a discount target. Okay, we can look at the range of the 3-day look back here. We can start by analyzing the phase of price delivery here. So we had the range of the 3-day look back, a classic sell. We had the range of the 2-day look back being a bearish New York reversal, right? So this is expansion, retracement, expansion. And yesterday, well, we have to include the day of Friday, right, which was a bank holiday inside of this range. Now, you know, if you look at price just from the price action of yesterday, so, you know, starting from these levels, this is pretty clearly some kind of swing to Z in my opinion. But I would also deem, well, not deem, I would also label the profile from the open of Friday as a swing to Z, right? The market creating a swing and eventually creating the consolidation. Okay, so we come from expansion to retracement to expansion to consolidation, right? So again, with the fact that price failed to create a bullish order block, with the fact that the market was unable to displace / reclaim the PD rate located at 50% of the range, you know, I do believe that the market should favor a delivery towards discount. But anything could change, obviously, right? For all that matters here, Asia will trade here and start reversing. Obviously, these are things that you need to monitor into your pre-market analysis as, right, you're preparing for the 9:30 open. All right, so yesterday was a swing to Z. Now, you know, is there a relevant level inside of this range? Maybe there is, you know, maybe here. I would say that if there is one from the previous day here, it's the low. It's the low of Asia. Because as we saw, right, this is an intermediate term low here, closing this fair value gap. So it will be very important to see if the market displaces or sweeps this level. Overall, we can look at the 3-day look back range, and we can analyze what's inside of the range, right? So they're essentially the same levels that we had going inside of yesterday, right? Being right here, there's a small volume imbalance, so we need to include this inside the fair value gap. This was where the previous day's low was made, as we saw. Right, so this level is located in discount. We saw that at 50% of the range, we obviously had here, right, the big up close candle. On the hourly, this is represented by these levels. On the 1-hour chart, there happened to be a fair value gap cutting through this order block, right? So this was the level that we had identified. And we saw that in premium, right? So at 75% of the range, we had right here the intermediate term high in question, right, which was the high of Thursday. Yeah, so obviously these levels remain important. So far, you can see that at the open, the market has reclaimed this fair value gap. It has done so, creating the range of a bearish order block at the quadrants of this level, right? And this is something, say, that yesterday the market failed to do here, right? On the idea of the weekly profile, it failed to create a bullish order block inside of the bearish order block. Okay, so next target here, we have the range of the fair value gap, right, located at 25% of the range. We saw that the market was already sensitive to this level as the low here of Asia yesterday was created right at the high of this fair value gap. So it's going to be very important to see if the market trades at these levels. Again, does it displace it or does it sweep the level? And in the case that the market would sweep this level, right, then you're gonna want to see how the market trades back inside of the what is an inverse fair value gap at the moment. And if this level gets broken, then you're looking at the range of the intermediate term high, right? And from that point, if the market does this tomorrow, then I do believe that the drawn liquidity will be not only the intermediate term high, but then we'll be looking at the previous weekly high. Something else also that I wanted to cover is that there's currently a divergence at the previous weekly high. Right, on the S&P 500, the previous weekly high is this intermediate term high in question. The S&P 500 has traded above this high, Nasdaq has failed to do so. Okay, so in case of a, right, so I'm saying this is why I would prefer seeing a delivery towards discounted targets, because in my opinion the narrative seems to be heavier on that side, right? There's a lot more confluence, as we saw on the daily, the 4 hour and the 1 hour. Looking at the profiles, there's much more narrative in my opinion for that type of delivery. What would change this for me? This would change if the market were to respect the bullish fair value gap here, so taking out as a rate on stop, right, everyone positioned long here at going inside of midnight, so the new day, the IPDA true open is what I mean, right? Take out early buyers here to then trade higher, right? So this would be option number one. In terms of a weekly profile, right, this can likely lead to a Tuesday low of week. If not, if the market were to displace this level, then I'd be looking at the range obviously of the previous weekly high. I do believe that as this fair value gap again is inverse, then the market should be trading to the previous weekly high, to overall the range of the 3-week look back. But everything's possible, right? Could be the market trades here, trades below it, and then inverse it, creates a divergence. But whatever, we have to take it one day at a time, obviously. Meanwhile, we have here a sensitive level in discount, right? So coming inside of New York will be important to see how the P here at 25% and at 50% of the range, how were they traded, right? Expansion away from them, fair value gaps through them, balanced price ranges created inside of them, right? Such as in here, right? Trades higher, trades lower, creates a series of bearish order blocks, right? You got one here, you got one right at 50%. And from there you'll be able to have, right, a bias and understanding as to what the daily profile should be, and obviously where the drawn liquidity is. Okay, so I think that's pretty much all covered. We looked at the key levels for tomorrow. Again, this is a day trader's market, so I'm not going to be having standard deviation, say, on the 4-hour chart, right? Because overall the market is proving to me that every time it trades to discount, it comes back to 50%. Every time it trades to premium, it comes back to 50%. Right? So at the moment, I don't want to be giving out Well, I don't want to have a strong long-term bias, right? I'm taking this day by day, week by week. Okay, so good luck and good trading tomorrow.